Some say this could save American families $100 billion a year. Others warn it could collapse access to credit for millions. Today, President Donald Trump has ignited one of the biggest financial and political battles of his second term by calling for a 10% cap on credit card interest rates, a move that sent bank stocks tumbling and Wall Street scrambling. Supporters call it long overdue relief for struggling households. Critics say it could push low-income Americans into payday loans and pawn shops. So which is it? A breakthrough for consumers or a dangerous disruption of the financial system? Late Friday, President Trump announced he wants to limit credit card interest to 10% for 1 year, starting January 20th. Right now, the average American credit card rate is just over 21%. Some families are paying nearly 30% on their balances. Trump says those numbers amount to what he calls ripping off the American public. But what he did not explain is how such a cap would be enforced, by executive action or by Congress. Investors did not wait for clarity. On Monday, shares of America's biggest banks, J.P. Morgan, Bank of America, Citigroup, Wells Fargo, all fell sharply. Even British banks with U.S. credit card exposure were hit, because American credit cards make up a major share of their profits. Payment giants Visa and MasterCard also dropped, while consumer lenders lost as much as 10% in a single day. The message from Wall Street was clear. This proposal could strike at one of the most profitable corners of modern banking. Credit cards are not like mortgages or auto loans. There is no house, no car, no collateral. If a borrower stops paying, the bank absorbs the loss. That is why rates are high. Banks say they are pricing risk. Analysts warn that if rates are forced down to 10%, banks will simply stop lending to people with weaker credit. One strategist put it bluntly, when you can't price risk, you stop taking it. And here is where the debate gets uncomfortable. Some economists say a rate cap would not eliminate debt. It would just push it somewhere else. Buy now, pay later firms, payday lenders, pawn shops. In fact, stocks of companies like Affirm rose after Trump's announcement, suggesting investors think these alternatives could gain customers if banks pull back. If this story matters to you, and if you want calm, fact-based reporting on the financial forces shaping your future, take a moment to like this video and subscribe to Ian Briefing. It helps us keep bringing you stories that truly affect your wallet and your life. Nearly 200 million Americans have credit cards. Together, they are carrying more than $1.2 trillion in revolving debt. And last year alone, Americans paid about $160 billion just in interest. A 10% cap could, in theory, save households around $100 billion a year. That is not a small number. That is grocery money, rent money, retirement money. Researchers studying this proposal say banks would still earn billions because they also collect fees from merchants every time you swipe a card. In other words, interest is only one of their 3 major revenue streams. But rewards programs, airline miles, cash back, points, could disappear again, just like they did when debit card fees were capped years ago. There is one serious warning history gives us. In states with strict interest caps, banks tend to stop lending to people with lower credit scores. One study suggests that under a 10% cap, Americans with scores below 600 would likely lose access to traditional credit. That means no card for emergencies, no buffer for medical bills, no bridge between paychecks. Many legal experts say the president cannot impose this alone. It would require a law, passed by both the House and the Senate. Interestingly, this is one of the rare moments where political rivals agree. Conservatives and progressives alike have proposed legislation to cap credit card rates, using Trump's promise as momentum. So here we are, A policy that could save Americans billions, but could also reshape who gets access to credit in this country. Relief for many, risk for others, and a political fight that is only just beginning. What do you think? Should credit card interest be capped at 10%, or would it do more harm than good?